welcome. You're watching Small Cap Power, and joining us today is Frank Holmes, the CEO and Chief Investment Officer of US Global Investors. Frank, thank you so much for your time.
It's great to be with you.
Okay, let's talk about your US Global JETS ETF. Now, we have the busy summer travel season upon us. How can investors take advantage of this time?
Well, the JETS ETF was basically a way to, with what they call smart beta, looking at factors that picked airlines and airports and jet manufacturers like Boeing based on a set of fundamental factors. So it rebalances every quarter except for the four big airlines, which includes United, Southwest Airlines, Delta, and American Airlines. They're the four big horsemen, and they're basically 12% each of an index. But the index is smart and intelligent, and when we back tested it, going back over a decade, we found it outperformed down cycles, up cycles, oil prices rising, oil prices falling. And it was better to have that sort of group of companies together.
So the current trend in crude oil prices, they're on an upswing. You don't see that affecting the profitability of these airline companies?
Oh, it does affect the profitability, and it affects them all differently. So it has a bigger impact on American Airlines because they have no hedging. But the CEO does not take a salary, he takes it in cash, he takes it in stock. So they're very unique, whereas Delta Airlines bought their own refinery. So they're able to mitigate that with a hedging process. And Southwest Airlines and United have a very sophisticated way of hedging 50% of their costs on a rolling 12 months out.
So they tighten their belts and become more disciplined.
Correct. But really the airlines, which you know, the cost of bags, the cost of changing a ticket, the cost of this, the cost of that has gone from 10 years ago of $2.5 billion to over $40 billion, and globally is estimated it's going to be all these auxiliary fees are going to push something like $80 billion. So it's more important than almost the ticket.
So within this airline pack, any companies which have performed well in recent times?
Well, the best is we don't really like to go the individual names. We go to the website, all this regulatory world we live in, and you can see the changes. But most of the changes have to do with the foreign countries. And the structure of this model is that 80% of the companies are American, but 70% of the names are foreign. Okay. And the 20 foreign names are 1% each. And it mitigates currency volatility. So Air Canada would show up, WestJet would show up, Chorus would show up because they have high returns on invested capital. And that's our overarching factor we look at, and revenue per seat per mile.
I want to talk about now the Trump administration's America First agenda. They've levied taxes on steel and aluminum. There is talk about levying a 25% tax on auto imports. What does this mean in general for the whole economy? And will it cause inflation, a rise in consumer prices? And what will it eventually mean for gold?
Well, there's no expression, you can't suck and blow a balloon at the same time. And President Trump lowering corporate taxes, streamlining regulations, fast-tracking the EPA process, holding government workers accountable. It was a big reason why many voters voted for him. There's an I've written about this around the world, from India with Modi, and China, 40% of the world's population have elected leaders to go after basically fat-bloated government bureaucracy or corrupt ones. Now we see it in Italy. The establishment there isn't the Rockefellers, it's government bureaucracy. So going after that and creating a streamlining is great for economic growth. Tariffs is another form of taxation. And I think a lot of it has more to do with puffery, of him trying to say renegotiate everything, than really hard-nosing and costing the economy a lot. It will be inflationary, that's a known fact, but it's also extremely bullish for small cap stocks. Okay. So when you listen to business media, it's so negative. Everyone hates Trump. However, the stock market
loves to hate Trump.
They love to hate him. Do you know it's the most used word in the world, the English world? And in all media, Trump is the #1 word. So it's fascinating for me when I look at those word choices. But coming back onto Trump, his policies are very much for a global growth and economic activity. So I remain very bullish, and when I take a look at the amount of money, capital spending for durable goods, we're 10 years from behind from zero interest rates. Now that's changing. So we can have a sustainable growth. The lower taxes in America immediately showed up in Walmart increasing salaries. Therefore, there's more spending. And then for corporations that are manufacturing, they immediately start replacing all their old equipment. So we have a very slow, sustainable growth. And if we look at purchasing manufacturers index numbers in America, they're suggesting a 3.3% real growth.
Okay.
But the small cap stocks do the best on tariff rhetoric. And they do the best in Canada, and they do the best in US. So you've got to put your hands over your ears and don't listen to all the negative Trumpism. You've got to focus on the Wisdom of Crowds book wrote about this. The market is telling you where things are going. Quant funds are 70% of trading. They are looking at this data and analyzing like Google on steroids, and small cap stocks continue to grow. So we're focused at those with the highest cash flow returns on invested capital.
Okay, wonderful. Thank you so much for your time. Always a pleasure to speak to you.
Great, thank you.
Thank you.